You're going to lose money tomorrow. Not because your strategy is bad, not because you didn't study enough. You'll lose because there's a voice in your head right now, and it's lying to you about what trading actually is. 89% of retail traders quit within 2 years. Most of them were smarter than me, had better setups, studied harder, but they all shared something, and it wasn't lack of discipline or bad risk management. It was a collection of beliefs about trading that felt true, but destroyed them anyway. I'm going to show you 7 mindsets that separate the traders who make it from the ones who blow up. Some of these will make you uncomfortable. 2 of them contradict each other, and they're both right. And one of them, well, I'll get to that one later, because when I first heard it, I almost quit trading entirely. Let's start with Michael. Mindset 1. Your losses aren't real until you close. Michael was a high school chemistry teacher, 53 years old, saved $42,000 over 6 years to fund his trading account. Smart guy, patient, the kind of person who measures twice and cuts once. He took his first trade on a Monday morning, Euro USD long. The setup was clean. By Wednesday, he was down $800. His rules said close it at 500, but he didn't close it. You know why? Because in his mind, that loss wasn't real yet. It was just floating there, temporary. The market could turn around. It wasn't locked in until he clicked that button, so he held it. By Friday, he was down $2,300. Still didn't close. I've watched this happen 47 times. Different traders, same pattern. They'll close a winner at $50 profit because they want to lock it in. They're afraid it'll reverse. But they'll hold a loser for weeks because somehow, magically, an open loss doesn't count as real money. Here's what nobody tells you about this mindset. It feels protective. You think you're giving the trade room to breathe, being patient, not panicking, but you're actually doing something much darker. You're making reality optional. Sarah traded differently. She was a software engineer, 28, had a small account, only $9,000, but she had a rule that Michael didn't have. Every loss was real the moment it hit her stop, not when she closed it, when it hit the number she'd decided beforehand. She lost on her first trade, then her second, then her fourth. But something strange happened. By month 6, she was up 22%. Michael was down 68% and had to take a second job to rebuild his account. The difference wasn't strategy. They both used moving average crossovers. Basic stuff, nothing fancy. The difference was Sarah treated her losses like they'd already happened, because they had. The moment price moved against her, that money was gone. Closing the trade was just paperwork. This mindset shift sounds small. It isn't. When you accept that losses are real before you close them, you stop negotiating with the market. You stop hoping. And hope in trading is poison disguised as optimism. Tomorrow, before you take a single trade, write this down somewhere you'll see it. My stop loss isn't a suggestion. It's where my money already disappeared. I'm just making it official. Mindset 2. You're trading to feel something, not to make money. Here's something I noticed after watching 200 traders over 18 months. The profitable ones were bored most of the time. The unprofitable ones were never bored. They were excited, terrified, hopeful, desperate. They felt alive, and that feeling was killing their accounts. David started trading after his divorce. Investment banker, so he knew markets, had all the credentials. But every morning at 9:30, he was clicking through charts looking for setups. By 10:15, he'd taken 4 trades. By lunch, 7. His rule said maximum 2 trades per day. I asked him once why he kept trading when he'd hit his limit. He said, "I saw an opportunity." But that wasn't true. I pulled up his trades. 5 of the 7 were barely qualified setups. 1 was against his own trend filter. He wasn't trading opportunities. He was trading to feel engaged, to feel like a trader, to escape the quiet emptiness of following a simple system that only gave him 2 signals a day. because 2 signals a day meant 22 hours of doing nothing, and doing nothing felt like being nobody. The profitable traders I know, they trade like they're working an assembly line. Same process, same rules, same mechanical execution. Sounds boring? It is. They're bored, and they're rich. The traders who blow up are never bored because they've turned trading into entertainment. Every candle is a story. Every setup is a chance to prove they're smart. Every win confirms they're special. And every loss? Well, every loss just means they need to find a better setup, watch more videos, try a new strategy. Yuki was a casino dealer before she started trading, worked in Macau for 11 years. She told me something that changed how I think about all of this. She said, the players who won were the ones who looked miserable. The ones having fun always lost. She traded exactly 4 times per week, Tuesday and Thursday mornings, Wednesday and Friday afternoons, had one setup, took it when it appeared, ignored it when it didn't. Some weeks she took 0 trades, some months only 6. Her account grew 41% in her first year. David's account was gone in 5 months. You have to get honest about why you're clicking that mouse. Are you executing your edge or are you scratching an itch? Because if you need trading to make you feel alive, it will definitely make you feel something. Broke is a feeling too. Mindset 3. The market owes you consistency. Remember Michael from earlier? After he rebuilt his account, he did something different. He tracked his results for 90 days, won 58% of his trades, made consistent profits for 6 weeks straight. Then, week 7 hit, lost 4 trades in a row, then 2 more, then 3 more, 9 consecutive losses. His strategy hadn't changed, his execution was the same, but suddenly nothing worked. He quit, told me the market had changed, his edge was gone, nothing made sense anymore. But here's what he didn't know, because nobody teaches beginners this part. I tracked 74 profitable traders over 18 months. You know what I found? The ones who survived averaged 11 losing weeks per quarter. Not days, weeks. They'd have stretches where they lost money for 4, 5, 6 weeks straight. Then suddenly, they'd make it all back plus extra in 2 good weeks. The market doesn't owe you a win after 2 losses. It doesn't owe you a good week after a bad month. It doesn't care that you did everything right. Results are random in the short term, even when your edge is real. There's a trader named Marcus who runs a small prop firm. He told me he fired 2 traders last year who had winning strategies. Both of them were profitable over 6 months, but both quit after their first 3-week losing streak because they thought something was broken. He capped a 3rd trader who lost money 4 months out of 7. That trader is now running a $200,000 account and pulling $15,000 a month. You know what he understood? Consistency means executing the same process, not getting the same results. Your brain hates this. It wants patterns. It wants cause and effect. You did the right thing, so you should get the right result. But trading doesn't work that way. You can do everything perfectly and lose. You can be reckless and win for a while. The results lie. The process tells the truth. What separates winners from losers isn't on the charts. It's in how they handle the weeks where everything they do turns to dust. Do they trust the process anyway, or do they assume it's broken and start searching for something new? Mindset 4. Your identity is your edge. Here's where it gets uncomfortable, and this is that mindset I mentioned at the start, the one that almost made me quit. You don't have a risk management problem. You have an identity problem. Let me show you what I mean. There are 2 traders, James and Robert. Same strategy, same market, same week. James makes $4,000. Robert loses $3,000. The difference isn't on their charts. James sees himself as someone who follows rules, Not because he's disciplined, he's not particularly, but because breaking rules would mean he's not the person he believes he is. When his setup doesn't appear, he doesn't trade. Not because he's resisting temptation, but because traders who follow systems don't take random trades, and he's a trader who follows systems. Robert sees himself as someone who's good at reading markets. He has discretion, he's adaptable, and when his setup doesn't appear, but he sees something in the price action, he takes the trade anyway. Not because he's undisciplined, but because good traders trust their instincts, and he's a good trader. Both identities feel true. Only one survives. I spent 4 years trying to become disciplined. Read every book, tried every technique. Meditation, journaling, accountability partners, the whole list. Nothing stuck. Then someone asked me a question that broke everything open. What kind of trader are you trying to become? I realized I was trying to force behaviors onto an identity that didn't support them. I saw myself as smart, adaptable, intuitive. Those are great traits for some things. They're death for systematic trading. So I changed the identity first, not the behavior. I started seeing myself as someone who executes a process. That's it. Not someone who predicts, not someone who adapts, someone who executes. And suddenly the discipline wasn't discipline anymore. It was just who I was. This sounds like self-help nonsense, I know. But track your trades for 2 weeks and write down what you were telling yourself about who you are when you broke your rules. I bet you'll find you weren't breaking them. You were being consistent with an identity that contradicts profitable trading. The shift here is subtle but massive. Stop trying to force behaviors. Change who you think you are first. The behaviors follow. Mindset 5. Certainty is the enemy. Chen was a physics PhD, brilliant, could model probability distributions in his sleep. He built a trading system that backtested its 62% win rate over 11 years of data. Beautiful system. He was certain it would work. It didn't. Not because the system was bad, but because his certainty made him inflexible. Markets changed slightly in 2023. His edge dropped to 54%. Still profitable, just less. But Chen couldn't accept it. He was certain it should be 62%, so he kept adjusting, optimizing, searching for what was broken. By the time he stopped, he tweaked his system into something completely different that had never been tested and didn't work at all. The best traders I know are terrible at predicting the market. That's exactly why they win. They're not certain about anything except their uncertainty. They know they don't know, and that knowledge protects them. Lisa traded Forex for 16 years, makes somewhere between $20,000 and $40,000 a month. It varies, and she's okay with that. I asked her once what her edge was. She said, "I genuinely have no idea what's going to happen next, so I bet small and let the market tell me." Every trade she takes, she's uncertain, but she's certain about her uncertainty, which means she's never surprised when she's wrong. She just exits and moves on. You're going to want certainty. You're going to study more, add more indicators, find the perfect system. But certainty in trading is a trap. The moment you're certain is the moment you stop adapting, and markets reward adaptation, not conviction. Here's the shift. Trade like you're probably wrong. Size your positions for being wrong. Plan your exits for being wrong. Execute your rules knowing they might not work this time, and be completely okay with all of that. Mindset 6. The scoreboard is lying to you. Every day you check your P&L, maybe 14 times. I used to do 20. You see green or red, and your brain makes a story about what that means. Green means you're good at this. Red means something's wrong. But that's not what those colors mean. They're nothing. They're noise pretending to be signal. Tom tracked something unusual for 90 days. He tracked not his profits, but how many times he followed his rules. Days where he executed perfectly got a check mark. Days where he broke his rules, even if he made money, got an X. After 90 days, he had 62 check marks and 28 X's.
His account was up 18%. But here's the strange part. On the X days, he'd actually made more money. His rule breaks were profitable, for now. But he didn't celebrate them. He marked them as failures. By month 6, his account was up 43%, and he'd increased his check marks to 78% of trading days. The X days still sometimes made money, but he treated them like losses anyway. He changed what scoreboard he was watching, not profit, process, and the profit followed later. Your P&L is a lagging indicator of decisions you made weeks ago. It tells you nothing about whether you're improving. It only tells you whether the market happened to reward your edge recently. But your brain doesn't see it that way. Your brain sees green and thinks, keep doing this, and sees red and thinks, change something. Both responses are wrong. The only scoreboard that matters is, did you follow your rules? Everything else is just variance, playing dress-up as feedback.
Mindset 7. Losing traders work harder than winning traders. I know that sounds wrong. Stay with me. Rachel spent 4 hours every morning analyzing charts, read 6 trading books, watched 27 YouTube videos per week, studied price action, volume analysis, market structure, order flow. She was dedicated, hardworking, serious about her education. She lost money for 18 months straight. Alex spent 30 minutes before market open reviewing his 2 setups, took 1 trade per day when it appeared, spent the rest of his day rock climbing, hadn't read a trading book in 2 years. He made money 46 weeks out of 52. The difference? Rachel was working hard on learning. Alex was working on executing. Learning feels productive, feels like progress. You're getting better, smarter, more knowledgeable. But knowledge isn't the edge, execution is. Losing traders collect information. Winning traders execute simple systems repeatedly until they stop thinking about them. And that stop thinking part is what makes it work. Because when you're thinking, you're overriding. And overriding is where accounts go to die. You probably already know enough to be profitable. You don't have a knowledge problem. You have an execution problem disguised as a learning opportunity. Stop studying. Start executing. Pick 4 rules, not 3, that's too neat. Trade only those and resist every urge to find something better. Better doesn't exist. Better is just different, and different resets your execution curve back to 0. Remember Sarah from the beginning, the one who treated losses as real before closing them? She's still trading, makes between $8,000 and $12,000 per month now, lives in Bali, trades 90 minutes per day. Michael rebuilt his account and quit after the second blow-up. He's back to teaching chemistry. Nice guy, smart. Just believe the wrong things about what trading actually requires. That's the choice in front of you. Keep believing what feels true or start believing what actually works. Those are rarely the same thing. Tonight, pick one of these mindsets and write it on a sticky note where you'll see it before you trade. Not all 7. 1. Because changing 7 beliefs at once is changing 0 beliefs, but changing 1 might change everything. Then come back and tell me which mindset hit hardest, which one made you realize something about why you've been struggling. I want to know, because maybe your insight will help the next person who reads this. And if this made you uncomfortable, good. Comfort in trading is usually a signal you're avoiding something true.